What's up everyone, it's Scotty with MoneyVest. In this video, I wanted to break down Google's earnings for the fourth quarter fiscal year 2023. And the stock's down obviously a little bit close to 7% on the day. So tumbling down quite aggressively after hitting a new all-time high. It's gapping down pretty aggressively, trading at just over $142 per share. So I'm going to break down everything Google reported in this video and also talk a little bit about their balance sheet, the intrinsic value. Everything is going to be covered, and my actual fair value on the stock as well, and why I also do believe that this is a little bit of an overreaction for Google right now as well. So hope you all enjoy this video, find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And I want to remind everyone that today, January 31st, is quite literally the last day. If you want to join and be a part of our MoneyVest community, there's only a couple more spots left, and the 16% annual discount does expire and end towards the end of today. So after midnight, it is going to go away. So again, link's going to be down below if you want to join, of course, be a part of our MoneyVest community. So this right here are the Google numbers. So what you'll notice is the revenue came in at just over $86 billion. That's a 13% growth on a year-over-year basis. And for the entire year ending in December 31st, $307 billion. That's a 9% growth on a year-over-year basis for the company. And operating income came in at just over $84 billion with a year-over-year increase of well over, I think, 10%. So 84 divided by 74, 13.5%. And for the fourth quarter came in at $23.6 billion, which is an even stronger growth rate of 27%, with operating margins also expanding further at 27% as well. So on the surface, absolutely fantastic numbers, and quite literally they are, because even the net income quite literally expanded considerably by over 50% from $13.6 billion in the fourth quarter of 22 to fourth quarter of 23 at over $20.6 billion. So if you do the math here, 20.6 divided by 13.6, we're looking at a 51% growth on a year-over-year basis. And of course, 73 divided by 60, we're looking at a growth rate of 21% on the entire year for the fiscal year 2023 as well for the company. So absolutely astronomical growth here. Fantastic numbers when you consider the company is actually generating hundreds of billions of dollars in revenue. For the fourth quarter, YouTube ad revenue also did expand to $9.2 billion, and Google search was over $48 billion, and Google network coming in at just shy of $8.3 billion. So that was the only segment in advertising that saw a little bit of a slight decline, but overall Google advertising did grow from $59 to $65.5 billion, and subscriptions and platforms and devices also growing to $10.8 billion. So Google services total was $76 billion, and Google Cloud revenue, which I think is one of the reasons why Google is selling off on the day today, because 9.1 divided by 7.3, we're looking at a growth rate of just over 24%, which according to analysts may have been a little bit lower, considering that they were expecting 30% plus growth on a year-over-year basis. So total revenues at $86.3 billion versus $74 billion. So that again was a 13% growth. But Google Cloud, again, I mean, these are just like billions of dollars, and I think the Google has done really well in growing these numbers, and the numbers overall for the fiscal year fourth quarter 23 and the entire year 23 were, in my opinion, absolutely incredible. And Google services, again, $26.7 billion in operating income. Google Cloud coming in at $864 million. So once again, backing up that profitability here, and total income from operations from $18.1 billion to $23.6 billion for the company, with again the balance sheet, one of the best balance sheets on Wall Street here, with marketable securities and cash equivalents overall sitting at 110, almost $111 billion, with long-term debt sitting at $13 billion here. In fact, total liabilities are sitting at $119 billion. The company's got almost as much cash as their total liabilities combined. So again, one of the best balance sheets out there. And this right here is going to once again be the entire numbers for the year ending in 2023. So $307 billion in revenues, with a total net income of $73.8 billion, and a diluted earnings per share sitting at $5.80. So the company's trading at $142 divided by $5.80. We're looking at a 24.4 times trailing 12 months price to earnings multiple, right? Trailing 12 months price to earnings multiple is what we have for Google right now. And this right here is going to be the free cash flows. So operating cash flow is going to be right over here. So we've got net cash provided by operating activities just over $101 billion. That's absolutely phenomenal. And CapEx, which is going to be purchase of property, plant, and equipment, $32 billion. So you do 101 minus 32. We're looking at a CapEx, or actually a free cash flow of $69 billion. $69 billion was the actual free cash flow for the company. So if you come over to Google here, and if you plug in $69 billion, and let's say that we could roll that free cash flow by 12%, and give them a discount rate of 12%, terminal growth rate of 3%, margin of safety of 10%, share buybacks of let's say negative 2%, we're looking at, again, intrinsic value of just about $90, which again has been somewhat similar to what we have had for Google in the past. But again, the growth rate of 12%, in my opinion, is quite conservative. Google has been able to grow free cash flows and earnings by well over 20+% over the last 10, 20 years. So not saying that they're going to be able to do 20% again, but even if you go with something conservative at 16%, which I think is quite reasonable, low 100s is where Google's intrinsic value ends up being. Now, if you do like a reverse sort of DCF model here, if you try to match these two numbers, and if you go with, let's say, 20% here or 22%, or 24%. So there we go. Boom, right there, $143. These two numbers are now aligned, which is the market price aligned with the intrinsic value. And that simply means that Google now moving forward needs to achieve a 24% growth rate in order to justify today's valuation, with a terminal growth rate of 3%, 12% discount rate, 10% margin of safety, and 2% share buyback. So 24%. It's definitely a little bit on the higher end. So if I go with a little bit lower number, let's say 20% or even as low as 16%, then Google, yes, can maybe, pull back 20-25% before it starts trading at a little bit of an intrinsic value moving forward. Now, in terms of earnings expectations here, so if you come over to earnings estimates, and if you look at 672 as being the number for 2024, that's a 15, almost 16% growth rate here on a year-over-year basis. And we know that share count is sitting at just over 1.2 billion, so 12430 times $6.78. We're looking at $84 billion, or is that right? 84? No, that can't be right. So let's just go back to looking at the financials here. We'll quickly take a look at the share count. So shares outstanding, diluted shares outstanding is going to be 25.352. 25.352 here. So, okay, 25.3, and market cap's at $1.7 trillion for the company, which is just correct. So 25.352, so 25.352 times 670, we're looking at about $169 billion. Okay, this needs to be adjusted a little bit. I'm trying to understand here because Google did go through a stock split. Let's see if you come back. Okay, 20-for-1 stock split. So let's see. Just doing that. 1.267. There we go. 1.267 times 678. $8.6 billion. Okay. So that is going to be that number here. So we look at the net income. Okay, 73. Okay, so that was 86. Let's just do $86 billion. I'm just tripping out on the share split here, but $86 billion is the number that we're looking for. Okay, so we're going to come back over here to this model. 86 billion, so 86000. Boom, right there. And we apply growth rate of, let's say, 14% and a multiple of 20. And then 12% discount rate, 10% margin of safety, and negative 2% as a share dilution. Then, of course, the fair value ends up at around $150. So $150, and that's going to be a 5% sort of undervaluation for Google. That's considering a 20 times P multiple, 14% growth rate for the net income. 12% discount rate, same exact multiples here, same exact stuff from the reverse DCF, and 2% share dilution for the company as well. So $150. So if you kind of average those two numbers out between the reverse DCF, which is 106, and the discounted earnings multiple model, 150, if you kind of average these two numbers out, we're looking at about $125 per share as somewhat fair for Google. So that's actually a good thing because, the fact that it's coming down, it's giving us the opportunity to potentially dollar cost average into the stock in the future. So right now it is trading at a little bit of a support at around $139 to $144. So if it does end up, let's say, breaking down below this level, if it ends up breaking down below 139, 140, next support is going to be over here. So this right here is going to be that level to watch for Google, sitting roughly at $125, $126, and also aligned with that 200 simple moving average, which I believe is going to be a very strong, good buying opportunity for Google long term. And of course, my intrinsic value sits at roughly around $125, kind of taking the weighted average for these two ways of calculating the intrinsic value. So $150 based on the discounted earnings multiple model, and reverse DCF puts us at roughly around low 100s. So $125 Of course, the lower the better, the cheaper the better, because we're always looking for better deals and good deals. So 125 would be ideal, and of course, low 100s would be best right over here for Google from a long-term perspective. So I do believe a little bit of an overreaction despite the earnings beat here and the company reporting some very strong numbers. But that being said, I do still believe that it's got maybe a little bit more room for some more potential downside, and 125 is where I'll be looking to add more Google shares. So let me know your thoughts down in the comment section below, and what do you think about Google? Are you buying today, selling, or holding? What are your thoughts? As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget to subscribe to the channel, and happy investing, and I'll see you all in the next video.